The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, we kicked off the week on Monday with some moderate pressure in the grain and oilseed trade. Soybeans led the way to the downside. This coming off of a weekend where we saw good rains in many areas, and a week last week where we found some positive momentum to the upside in the grains and oilseeds. Also, the livestock trade was mostly higher, led by triple-digit gains in feeder cattle and live cattle. Let's talk markets. Joining us for a conversation, John Heimberg with Total Farm Marketing. John, good to catch up with you again this week. Thanks for joining us. And, starting on that grain side, it's an interesting thing to think about because we had an okay week last week. I know we put in some bullish technical signals in corn and beans. Good rains over the weekend, yet you have a lot of folks talking about this heat dome of doom and if that's going to be an adverse impact on the crop. And it seems like the market doesn't think so, at least after Monday's trade.
Yeah, well, we saw some of those forecasts moderate a little bit over the weekend. And then on top of that, pretty good batch of rainfall came right through the heart of the Corn Belt. You go look at the accumulated totals over the weekend. There's some areas got some pretty needed rain. And so the market came out with sell mode on that today. And actually, like I said, too, you saw some of those forecasts kind of moderate some of that heat for the last week of July today. So we'll see how that continues to play out overall. And, that's a big factor. This market had zero weather premium in. We got that talk of the heat dome and everything coming in last week. So I think we saw the funds did start covering some shorts, bringing a little bit of weather premium in. And now maybe as some of those tensions ease today, we saw the sellers come right back. And then the other side of it too, at least in the corn market, the demand side of the equation has become a question mark all of a sudden here. Export sales last week on Thursday were well below expectations and a lot of transfers from unknown to known, but not a lot of new sales. And then you go get export inspections today, less than 1 million metric tons, one of the lower numbers we've seen for quite a while. Starting to make you wonder in the back of your mind if that, that Brazil crop that's coming at us full speed right now and could be kind of starting to weigh on some of that corn demand. So realistically, the market might be focused more on the flow of corn on the global scale versus, the numbers that the USDA gives us and the supply picture and things of that nature.
It's a good thing to think about. And you throw in, of course, we got this August 1 date for all these tariffs and what's going to happen, all the unknown there. That adds to the demand conversation, I would say. And, by and large, you look at D's corn, 420-ish on the board. No beans, 1025. I mean, these are price levels that we've largely kind of hovered around for months on end in some way, shape, or form, John.
Yeah, they have been. They've seemed to be kind of a bit of a sticky area here or magnetic area that seems to kind of pull us back to now. Right now, looking at some things with the turn today, and if we get some more follow through, I'm looking at some of those downside targets again, especially as we get back to the September 1st notice day, end of August. Last year, our low was on the 27th, down at 385. Obviously, we had a supply picture of 2.2 billion bushels that quickly eroded down to the current 1.3 plus that we're seeing now. There's still a lot in the marketplace that just feels like those numbers that the USDA put out there are as friendly as they are. The USDA could be doing the producer a bit of a favor here with those numbers because the demand may be overstated. We saw some demand cuts the last report. The yield, we'll see where that goes to with the August numbers and the farmer surveys that calculate that. So there's some concerns in here. The other part of that low export inspection number, it might be the fear fact that producers aren't selling at these price levels, and maybe that available corn supply to get shipped out was just kind of a little tight in here. But I do still think, like I said, that demand is getting to be a question mark as we go forward. Just because if you look at the three things right now, corn, soybeans, and soybean meal, we just have growing supplies of those commodities with the South American harvest wrapped up for beans and going on for corn. And then just obviously the heavy crush we got globally pumping that soybean meal into the marketplace with really not enough buyers to handle it.
It's going to be, moving forward, can we finish out this crop? I think that's going to be the big key here. You mentioned some of the different things coming up here, crop tours and more, and, looking at the balance sheets. But with that as well, kind of that theme of export demand, can we maintain or build back up export pace? It just seems like all of this is kind of tied and interwoven together in this window. And right now, nothing looks overly bullish, John. It just doesn't.
No, it doesn't. It looks a little bit scary here again at times. And, when you talk about that export pace, talk today was, Brazil's now pushing corn for the October, November, December delivery window. Well, that's kind of hard, this delivery window as we start moving fresh supplies out. So, that's the biggest thing I think we got to really be watching too, is what is going to be the tail on these two crops for soybeans and corn that are coming out of Brazil as well as Argentina. Argentina, I saw one of their exchanges raise their bean crop up a few 100,000 tons again today, just saying that, hey, we got more beans than we thought coming out. So, when all those numbers start getting put together and then look at who's using it and the demand side of it, it sounds like China right now is just taking in a slug of beans, and they're kind of sitting on some stockpiles that they're not, heavily into the bean market at this time frame. And this large supply of corn here in Brazil too. Are they going to turn to U.S. corn? Typically, we start seeing some purchases around here, but obviously we found out last year they don't need ours. And then just talked this morning too. A crop over 700 million metric tons of total grain coming out of China's harvest. Last year was 706, so that's two monster crops in a row of corn and beans and wheat that getting harvested. So there's, like I said, just enough little big out indicators out there in terms of the global supply that's growing here with some demand concerns that just have me a little nervous about this market right now. Then you just got to throw in the calendar. It's a seasonal day to sell November beans today. We follow some spread trades, and three of those trades had sell something against November beans today. And at the same time, too, you're looking at that weakness that goes usually into September 1st notice day. As we're moving old crop out, getting ready for new crop come in. That's usually a tough window between now and that first notice day window on August 30th for that September contract.
How about the wheat complex as a whole, John? A little bit lower there today. I'd say that was the winner out of the grains. It was the best performing complex. But, I mean, as you look at wheat across the board, any notes, anything stand out to you this week?
I think the market liked the talk of that trade to get negotiation or deal put together with Bangladesh and 700,000 tons. We'll see how binding that deal was. In that regard. And then you throw in an export shipment number today that was well above expectations. So we've kind of seen our wheat demand kind of kick in a little bit. But again, here's another one. You got Germany getting ready to harvest and Europe getting ready to harvest. German supplies are up significantly from last year. You got the Russian wheat crop getting put together now, plus obviously ongoing harvest here. It's just another one of those windows where global availability of grain is starting to grow. So that's going to be a limiting factor. Last week on Thursday after we closed, that wheat chart looked as ugly as you could possibly be. Then we had the snapback Friday. So I think the next couple of days here could be key if we go back down through Thursday's lows and just kind of open this up to the downside again. There's a pretty good room for this market the fall here. But add into a nice break in the U.S. dollar today. I think that helps out a little bit. I think that was some of the reason maybe we saw grain prices come off the lows at the end of the day today. It was just that flux in that dollar. So we'll have to see how things continue to play out. But, right now, I just still think there's a negative tilt to all these grain markets here just because of where we are on the calendar and what's happening in the global scale in terms of bushels becoming available.
Before we talk livestock, any risk management thoughts, ideas, things for the grains that you would reiterate or mention to folks here just as we work through this window? I mean, anything you would remind folks about when they're looking at things on the grain side?
Well, just watch what your risk is. I mean, I was a pusher into soybean puts on Friday and followed up with a few more today, just from the pure standpoint of, we had a nice rally and a window we probably needed to reward it. Again, we're not making a lot of cash sales here because, again, the profitability is not there. I do have a few producers that are looking at basis right now for fall delivery. If you're doing something along those lines, because basis has actually got firmed up in some areas, that maybe you can catch some bid or two here or there. Just make sure you throw some type of defense underneath of it. Again, a good basis looks good. When prices are at 425 versus that same price at 380 if we do make that break. So don't be afraid to take that investment and kind of seal up those floors. That's kind of what I'm talking about, is getting control of bushels, and then we wait for our opportunity. If you got to make sales, then we can get some reownership on top of it. Just try to manage the damage as much as we can.
John Heimberg with Total Farm Marketing is our guest analyst here today on Market Talk. John, let's segue over to the livestock sector. Solid day higher in live cattle and feeder cattle futures. As you look at this cattle complex, we started to see more volatility here. Sometimes that's indicative of a top, but yet here we are, another good day to the upside. I mean, what's your feeling on cattle, especially ahead of, I know we got cattle on feed end of the week and things like that?
There's just no cattle out there. That's the biggest thing going on. And now we're going to see a little ramp up in terms of slaughter capacity, and there's going to be some competition for what cattle are there. Right now we got a little bit of a cycle going here the last handful of weeks, which is buy it early in the week, anticipate good cash trade. We get the cash trade, we sell it off Thursday, Friday, then we come back on Monday and we buy it again. We're kind of in a wash, rinse, repeat type cycle here. I think it's about the third week in a row we've started this way. Prices consolidated going into the end of the week last week, hung in there well, and here we are back to new highs in June. Now, how high can we go? I've got a 229 target, 230 target. That's where some of my long range charts are pointing to. That's where the June contract got to, and realistically, the cash market, is still holding in there pretty doggone well. And that's even despite a $20 plus drop in the retail value since the 4th of July. This is that seasonal window where retail prices come down and we expect the cash market to go with it, and it just really hasn't. We've lost a few dollars, but we're still talking decent money out there on the physical cash market. Same thing in the feeder cattle side. Again, those supply of Mexican feeder cattle are not coming anytime soon. We just don't have the cow herd right now to replenish supplies. To me, some of the cheaper contracts on the board, they've really run in the last couple of weeks are those 2026 contracts, April, June, August for next year. If you go look at those charts, we talk about a good strong markets, 45-degree angle. Those are running about a 75, 80-degree angle in terms of straight up over the last handful of weeks. Just, again, pricing and the fact that the cattle numbers just aren't there. Now, we'll see what cattle on feed gives us this week on Friday. To me, it's just going to probably reconfirm what we already know, that cattle supplies are tight. Maybe some of the more interesting reports could be cold storage. When we see that, we did see Brazilian beef imports really fall apart in the month of June. So where does that put us in terms of meat supplies in the cooler? So that'll be something I'll be kind of watching too, is just, where's the availability of beef that's out there? And if those supplies are tight, which the way the market's acting, they are, that's going to keep this market well supported as we move into the second half of the year here.
And something else, I almost forgot about this, but on Friday, it is the return of the July cattle inventory report. That's coming back after going away. And you think about in January, we had 87.2 million head, or that as of in the U.S., cattle and calves actually totaled 86.7 million head, 1% below the 2024 number of 87.2. So 86.7 was what we had January 1, 2025. Be interested to see if that number goes down even more from the January number, John, and maybe traders are going to price some of that in here ahead of that this week.
Yeah, very possibly. And, or just what's the flow of cattle? Are we starting to get some herd rebuild? Pasture conditions with the moisture have improved. So that could be a signifier that, maybe we're keeping a few extra cattle out of the feedlot, getting back into the breeding rotation. Those things also are going to tighten up the supply here in the near term. So that cattle inventory report, again, it's going to tell us what we already know. Cattle supplies are tight, now, but maybe we can get a little better picture. Are we trying to rebuild the cow herd, or are we not? I think that might be the biggest question that we're going to be looking to answer with that inventory report on Friday.
How about this hog complex? I look at August hogs up to 107 on Monday's trade. Then you look at October at 90. So big spread there. And what are you tracking on the hog side right now, John?
The cash market for hogs has been holding in there fairly well too. And, so we had to see the August contract trying to run back up, stay with the index. So we saw that move after pretty rough sell-off there. We saw the funds really liquidate out of their record long position in hogs. Now they seem to be finding a little bit of stability again and lifting this market up. That gap between October and the front end month is still pretty wide. We saw last week at least a couple days where we picked up some triple digit gains out there. Today we actually tried to sell it off, the August, December, February contracts over $1 lower in the first half of the day before they found some footing. So there might be a little bit of money flowing into that back end. Again, like cattle and not as tight, obviously, but those hog supplies are, could use a bit of a boost in terms of numbers. And obviously, the one question that we all ask is, as beef continues its strength and price, when do we start seeing more demand shift into that pork market in terms of consumer demand? So those are things that are going to keep this market supported, at least in here. We're kind of maybe getting past our seasonal window where cash prices kind of level out a little bit. We've seen that in the index as it's rolled over for a handful of weeks now. Now maybe starting to find some footing again as we start working towards those fall hogs.
John, great thoughts as always. Anything else you would mention or reiterate to folks on the show today?
Just stay on top of it. When you get a market like this, it's not fun to look at, but there's still opportunities out there to protect value of what there is, get control of those bushels. Cattle market's just so hard to gauge right now because the basis is so wide between cash and futures. But you still got safety valve puts that you got to have in place because unfortunately we're one headline away from the money trying to get out of the cattle market, and the door's not going to be wide enough. So we could see some aggressive moves there. So, again, just protect your bottom lines as best you can. If it goes worthless, fine, we understand, but look where the cash market's going to be for you. That's the biggest thing when we talk about this cattle market is just using those put strategies just to keep some floor underneath this, just in case things get crazy.
John, if folks want to reach out and talk with you there at Total Farm Marketing, I know a few ways to get in touch. How can they get a hold of you, John?
Just feel free to give me a call, 800-334-9779. Shoot me an email at johnh@totalfarmmarketing.com. And don't forget that website, totalfarmmarketing.com.
Always good to hear from you. John Heimberg, Total Farm Marketing. Thanks for joining us today on Market Talk. Have a great week. We'll talk to you next week.
Sounds good. Have a great week, everyone.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.